In today's video, we're going to talk about how to reduce your workers' compensation experience rating modifier. This rating factor in your workers' comp policy goes by many names, so you may know it as your X mod, the experience mod, and so forth. Let's start with the fundamentals. The mod is a complex calculation intended to add fairness to the workers' compensation insurance system. It does that by giving employers with better than expected claims experience a discount on their premiums and then surcharging employers with a worse than expected claim experience. This can create significant impact on the final premium you pay. If your policy has a mod of 0.80, you're getting a 20% discount from the normal rates, and conversely, if your mod is 1.20, you're paying 20% more than the average or normal. The last fundamental to understand is that there are two variable elements that go into the mod calculation, and they are your payroll and your claims data for 3 of the last 4 years. With that in mind, let's jump into the question, how do you reduce your mod? The obvious answer is have fewer claims and fewer expensive claims. But that's not the only issue to consider, and that only looks at what you can do in the future. And remember, if you have a high mod today, it could take 4 years for its way to flush its way out of the rating system. So is there anything you can do to impact your mod on this term, the next policy term, or the prior policy terms? There may be. Some experts say that 60% of the mods filed on employers are incorrect. Now, I'm not sure if that's right or wrong, but I do know we often find errors in mods which can result in large refunds for clients. So let's start, how can a mod be wrong? And that's simple. The data inputs I mentioned, payroll and claims, may not be correct. How can you check or verify that? Well, that's difficult if you don't know what you're looking for, but it's not impossible. To start, you'll need all of your workers' comp premium audits going back over the last 4 years. You'll also need copies of your loss history over those same policy years. And you'll need a copy of your state or national bureau's rating worksheets over the same time frame. That's a lot of data to sift through, but what you'll be looking for are discrepancies between what you know are correct figures and what may be incorrect figures in the Rating Bureau's reports. What we do is we run all these figures through an advanced software program that helps us identify the errors and then produces what the correct mod should be. But what it also tells us is what your minimum modifier is, and from there we can calculate your controllable modifier. These are incredibly useful numbers to know, and we'll go deeper into them in our next video. Do we turn over mistakes and get refunds? Sure, and that's great. For large accounts paying hundreds of thousands of dollars in workers' comp premiums, the refunds can be significant. But more importantly, we can help a client to understand the economic impact that claims have on their mod, their insurance costs, as well as the business's bottom line. There's an important fact here to understand when it comes to workers' comp. You're basically only renting coverage. And what I mean by that is your insurer will pay out on claims, but you essentially pay the insurer back those dollars in the form of higher premiums through the mod. Your insurer is really just financing the cost of the claims, but you are paying for them. If you're frustrated by that, I understand. I've seen the light bulb go off for other employers who make the connection between claims and premium costs, and once we get that, you can see the urgency to change. So that covers some of the math involved in the experience mod. If you're struggling with a high mod and want to learn more about how we can help you, please reach out and let's have a conversation. Let's see if we're the right fit for you and your business and how we can help you out. In our next video, we'll dive a bit deeper into the next steps on how to reduce workers' comp costs, specifically targeting worker injuries. Thanks for watching, and don't forget to subscribe below and like this video if you enjoyed it. Any comments? Would love to hear them. Thanks.